Is there a chance, given all the uncertainties, that the growth that we see in Asia, as well as Southeast Asia, gets stunted?
Well, I think stunted is probably too strong of a word. There are certainly warning signs out there with the trade disruptions that we're witnessing, with strengthening of the U.S. dollar, depreciation of some currencies across the region. But I think it's a little too early to make any calls for any fire alarm at this point.
But we're already seeing an escalation of the trade tensions within the U.S. and China. And given how these two countries, these two economies, are pretty much the biggest trading partners for most of Asia, surely that would have an impact.
Sure, it does. We did some research about a little over a year ago that suggested a 1% decline in Chinese growth would translate into about a 0.3% decline in regional growth as a whole. So again, that's 1%. That's still, we're not looking at a 1% decline in Chinese growth at the moment. So we're not overly concerned, but we do need to be paying attention to issues around debt. We do need to be paying attention around exchange rates. But countries are reacting and reacting positively to some of these challenges.
And debt is the issue. Very high levels of debt, and given that most of them, well, at least in Asia, denominated in US dollars, and where the dollar is and emerging market currencies are,
Well, I think one thing that's different. First, a lot of that is private debt at the moment, so the governments are still quite strong and they have buffers in place. We have seen strong trade growth last year. We have seen strong commodity prices, which are giving countries buffers to deal with some of these challenges. But that private debt issue is a concern. Countries are enacting macroprudential policy to try to limit credit growth to a certain degree. That has both positive and negative connotations, but at this point we do think it's a wise direction.
In my interview with the Prime Minister of Vietnam yesterday, he said that the region is pretty resilient. And I'm assuming he's looking at it versus the taper tantrum versus the Asian crisis that we saw earlier. How much confidence do you have? Are you upbeat, given that fundamentals are pretty much more in place this time round?
We do think fundamentals are much more in place now relative to 1997. If you look at how transparent the systems are currently, if you look at the development of the CMIM and AMRO and other measures out there to help countries share some of these risks, to help countries share information around these challenges. The financial markets are deeper now than they were back in 1997. So again, we don't think that this is a replay of what we saw during that time. But again, countries have to be on the lookout and they have to be enacting measures to reduce these risks.
Indonesia, possibly a case in point. The rupiah at 15,000, a level we've not seen in a very long time, and at record lows. Is the government, is the central bank making all the right moves?
We do think so now. We've seen them hiking interest rates on a couple of occasions in order to reduce some of those risks. Yes, the rupiah has devalued, but it isn't out of sync with devaluations we've seen of other currencies. So countries are devaluating against a strong dollar, but they're not devaluating out of sync with each other. So again, we don't think it's an alarm signal at this moment.
So no country is at risk, is that what you're saying?
Well, countries have differential levels of risk, certainly.
Which country has the highest level of risk right now?
Well, it's really hard to say because it's very difficult to see where the next challenge is going to arise. I mean, obviously, we've seen specific challenges emerging in Turkey and in Argentina. Do we think that any country in the region is at that level of risk at the moment? No, we don't. We think those countries are certainly ones that we have to be keeping an eye on and concerned about, but we don't think other countries in the region are at that level yet.
Is it too premature to be talking about possible contagion?
We don't see any signs of contagion at the moment. Certainly, again, it's something we need to be keeping an eye out for, but we have seen countries remain fairly steady through some of these challenging periods.
Stephen, give us a sense of ADB's 2030 strategy and how the ADB can help countries sustain growth.
Well, again, we've just revised our long-term strategic framework, as you made a reference to, Strategy 2030, where we're looking to help countries maintain prosperity, look for sustainability, look for inclusive growth, and lastly, make sure that that's sustainable over time. And that comes through with a number of different measures. Infrastructure investment, of course, is critically important. That's where we've been for a very long time. Financial sector, financial market development is critically important, but also investments in health and education are important. And lastly, regional cooperation. So again, strengthening cooperation, financial integration across the region is also critically important.
Of course, the discussion here is about ASEAN 4.0 in the context of a digital economy. How do ASEAN economies, how do they need to transform themselves to ensure that they're not left behind and that they benefit from a young population?
Well, as you say, these countries are very well positioned to benefit extremely from the fourth industrial revolution. But critically, these countries need to maintain levels of investment in education. They need to be bringing up a next generation of a workforce that is flexible, that can compete in a global economy. We do think that kind of attention is being paid, but again, a lot of things need to fall into place. Labor market regulation needs to be a little bit more flexible than it is in a lot of economies across the region. But also just investments in human capital need to be continue to grow.
Just one final question. The biggest risk to ASEAN or Asia remaining the main engine of growth in the world today?
Well, I think it's just all of these uncertainties combined. I don't think there's one factor that is critical. But if you look at continuing trade tensions, that's a concern. You look at this point that we were discussing a moment ago on levels of private debt, that certainly is a worry. And then lastly, sort of unanticipated increases in interest rates in the U.S. If those start to go up more quickly than we've thought, that poses a risk. So there are a few risks out there, but as long as we're keeping a close eye on it, we think that the countries can manage it.